Now, over the past several months, we've been seeing that dividend and income-focused communities go pretty crazy over these round-tail ETFs. I'm talking about QDTE, the Innovation 100 one-day till expiration covered call style ETF, and of course, XDTE, the S&P 500 one. And honestly, this is for pretty good reason. These ETFs not only offer massive distribution rates compared to most other ETFs across the entire stock markets, but along with that, these ETFs pay distributions on a weekly basis. Yes, I said weekly, not monthly, not quarterly. These ETFs pay distributions every single week, which is honestly one of the coolest things I've seen in my investing career, especially for someone like myself that does focus heavily on dividend paying ETFs and stocks, and someone that absolutely loves getting paid out distributions. But in this video, I want to talk a little bit more about what both these ETFs really are, how they work, and we're also going to backtest them and see what they've provided investors, at least up until this point, and trust me, some of these numbers are going to shock you. But then along with that, I also want to share something that I think about these ETFs that I really haven't seen anyone else talk about, and it's something very important. So if you want to dig into both QDTE and XDTE, backtest these ETFs, talk about them, and hear exactly what I think might be the most important aspect of all, make sure to stick around, drop a like down below, and let's get right into it. Real quick, for those that haven't already, make sure to go to the first link in my description and grab my new dividend investing ebook, where I share exactly how I went from $0 invested to now earning over $6,000 on a monthly basis and over $1 million invested in the market. Along with the ebook, you're also going to receive my custom dividend tracker, where you can track your dividend progress on an ongoing basis and reach your dividend investing goals. So make sure to grab yourself a copy of my dividend investing ebook and the new dividend tracker today. It's the first link in my description. So first, just to go over some of the basics in case you guys have not really came across these ETFs, or maybe you just don't really understand how they work, we'll go over all that real quick here. So it says right here, QDTE utilizes a synthetic cover call strategy that seeks to provide current income on a weekly basis while also providing exposure to the price return of the Innovation 100 index. It says it's the first ETF to utilize 0 days to expiry, or ODTE, options on Innovation Index, which is the Innovation 100 Index, as defined in the fund's prospectus. QDTE seeks to provide over an exposure to the Innovation 100 Index and generate income each morning by selling out of the money 1 day to expiration calls in the index, and this fund is of course actively managed. Now XDTE does the same exact thing, but instead it does this all on the S&P 500, but basically utilizes the exact same strategy. It then says why QDTE, it offers weekly distributions. QDTE seeks to pay weekly distributions out of the sold options premium. Income potential, it seeks to generate income through a covered call strategy on the Innovation 100 index and harnesses volatility. QDTE sells 1 day to expiration options on the Innovation 100 index and seeks to exploit structural market mispricings. So that's more or less how these ETFs work. They have a very short duration option strategy, and depending on what happens in the market, of course, depending on things like volatility, there is a ton of premium to be earned, which is why these ETFs can distribute such a high distribution rate. At least that's why they've been able to do so historically. Now, some more important facts about both these ETFs. QDTE has a 0.95% expense ratio, so it's almost going to cost you 1% to hold on to this one, which is sort of normal in range with what other actively managed ETFs would charge you for doing this much labor when it comes to this sort of ETF. The AUM for QDTE is $401 million, which is pretty big considering this fund is relatively new. For XDTE, it's $131. Now next, just to look at some of the distributions. This is what's really crazy about this style of ETF because it has such a short duration strategy, and of course it pays distributions weekly. This is why I think a lot of investors out there, especially income focused investors, are going crazy over these, because now you don't have to wait a quarter, now you don't have to wait a month, but every single week you now get paid distributions, which is not only awesome because getting money in your portfolio a little bit quicker could mean for faster compounding, but on top of that, it's honestly just a lot of fun. To look at some of the distributions so far in the last few weeks, on 9/11 it paid 44 cents, the week before that 33 cents, the week before that 31 cents, 47 cents, 47 cents, 51 cents, 56 cents. I mean, these are the size of distributions that you would normally assume from a high yield monthly covered call style ETF, and QDTE, most of the time, at least for the past several months, has been paying that amount of income to investors in the form of distributions on a weekly basis, which is insane. Now keep in mind there were a few weeks where the distributions were much smaller, like take April 9th for example, where QDTE only paid 9 cents, or another example of back in June 5th where QDTE paid 14 cents. Now again, if you zoom out a little bit and sort of just look at the average here, either way this ETF is paying a massive amount of distributions ongoingly annually. But it does still raise the question on if you want to be invested into something that isn't really going to pay the same amount or have a target for distributions every single week or every single month, because this ETF, at least historically, seems like it's sort of more or less all over the place over the long term. Now, before we go over some of the risks involved with QDTE and XDTE, I want to share with you guys maybe some of the darker sides of these ETFs. I wanted to just make this really clear. This is what I was talking about during the intro. I think there's something very important at play here, and this is one of my favorite parts about this ETF and ETFs like these altogether. Now, like I said earlier on, this ETF does pay weekly distributions. We just showed you exactly what the weekly distributions over time have looked like, etc., etc. Now, this is so important because I think that if you're a dividend and or more income-focused investor, it can be a long road to get to the point to where you're really truly financially free, or to the point to where your portfolio is earning enough money on a consistent basis to where it feels like it's quote unquote working. But because of ETFs like this one that have sort of gamified and really given dividend or income focused investors a little bit more hits of dopamine, because let's be real here, getting paid more frequently for the most part is a ton of fun. I think there's very few investors out there that would rather get paid on a longer duration schedule than a shorter one. ETFs like these give us dividend more income focused investors a small consistent weekly ounce of dopamine, and just remind us that our hard work, our hard-earned money is paying off, quote unquote, because of course us investing into something like this. Now, I'm on my 8th or so year of full-time dividend investing, taking this very, very seriously, buying different stocks and ETFs long-term. And for me personally, I've learned that there's a huge mental side to investing. And honestly, something like this, an asset that pays you every single week, can be a ton of fun to have in your portfolio. And although that's not necessarily what QDTE or Roundhill is trying to sell you by any means, I'm not saying that. I just think as a holder of something like this, it's a ton of fun to buy a share, buy a few shares here and there, and know that you're going to get paid within a week or so from there. But now let's talk a little bit about some of the risks when it comes to ETFs like these ones. As you can see on the long-term max time frame now, since March 4th of 2024, QDTE, for example, even though it's paid a ton of distributions, the ETF has lost around 9% of its value as far as price return goes. Now, you see a lot of investors ragging on ETFs like these ones, saying that they're going to keep NAV decaying to the ground, do reverse splits. And this is because a lot of ETFs prior to this one that offer massive distributions or yields have pretty much all done that long-term. Like, look at TSLY, for example, the Yield Max Tesla Option Income Strategy ETF. And I'm not saying that TSLY is anything similar to QDTE. I mean, they track or follow a totally different underline. I'm just saying that some of these ultra high yielders do have a track record of NAV decaying and trading down into the right over time, which is what a lot of income and dividend focused investors are sort of afraid of. Now, the argument, of course, is that even if you buy into something like QDTE, let's say, and it trades down 10%, 12% consistently every single year, if you're getting paid 20, 30, 40% as far as yield goes, as far as distributions, your net return, your total return is going to be just fine. And although the math does work out, that is the case. I'm going to show you the total returns for this one in a second here. That is a risk moving forward, and I think it's a little bit too early to tell, but I definitely do have some fears of buying into some of these higher yielders because, of course, the potential for them to trade down into the right in perpetuity. But the real numbers is what really matters here. And QDTE has been trading on the market for around half a year now. So even with the price decay, even though this ETF is down around 9% or so, with the distribution so far, QDTE is offering a 7.66% total return. And this is with dividends reinvested, or around a 6.8% return with dividends not being reinvested. Now, this just gives you sort of a grim picture of what things look like because of that share price trading down to the right. Now, still, it's offering an annualized gain of around 15 or 13% if we were to stretch this whole thing out, but still, for an ETF that's offering 20, 30, let's say 40% distribution rate, it really paints a different picture when you look at the total return, and it sort of gives us all a grim idea of what things look like if they trade down to the right, even if they offer massive weekly, monthly, quarterly distributions. Now, with that being said, at least so far, this ETF is in the green. It has been paying investors a ton of weekly distributions, which has been awesome. And like I said, it's a boatload of fun to hold on to. But still, it's a good reminder that every single ETF, every single strategy, even something as fun and interesting as this one, still comes along with their own risks. And that just has to be known right off the bat. Now, that being said, both of these ETFs are great opportunities for income-focused investors that want to generate a lot more distributions on a weekly basis. And this is, of course, depending on what happens with the market long term. But for me personally, I would always only own a small portion relative to the rest of my portfolio of something like this, just because of my personal risk tolerance. So now that we went over QDTE as well as XDTE, talked about some of the good, talked about some of the bad, and shared with you guys one of my favorite parts about holding on to one of these altogether. I lastly want to hear from you guys down below. Do you currently own any shares of either? Let us know in the comments. If you enjoyed this video, make sure to please drop a like on it and subscribe for more future content like this. Thanks as always for stopping by, and if you are interested in investing, make sure to check out these recent videos I posted right here.